Welcome back. You're watching Midcap Radar on CNBC-TV18. Well, we have a couple of stocks in focus on the back of their numbers. Care Ratings saw an uptick of almost 12%. Another stock that is in focus on the back of its numbers is NIIT. Vijay K Thadani, Vice Chairman and Managing Director, joins us now after the numbers. Well, good afternoon to you, Vijay. Let me first start off by understanding, Q4, we saw some muted performance come through. Revenue was down almost 12% on a quarter-on-quarter basis. The net profit too, saw a downtick of almost 1.5%. So what is your outlook going forward into FY26? And if you can explain the muted performance that came in the last quarter.
Right. So, first of all, I think thanks for raising that question. You saved me the trouble of explaining it. The quarter four is a seasonally weak quarter. If you see in the previous years also, last year, for example, quarter four was 13% lower than the previous quarter. This year it is 12% lower. In fact, if you look at it, the performance is to be looked at on a year-on-year basis for seasonal businesses. So, as a seasonal business, year-on-year, quarter four performance has grown 16% year-on-year. And in the profit after tax, which is the other one which you referred to as a parameter, that has gone up 18% year-on-year. Having said that, quarter four does have a little bit of slowness, because if you see our overall annual performance, which is also the last quarter of the year, we've grown 18% year-on-year, and the profit after tax has grown 20% year-on-year. This has been because of the business uncertainty in the economic environment, as well as which led to hiring freeze in the beginning part of the year, which is now beginning to open up. So we started with a very strong BFSI performance, which is what caused the growth in the first 2 or 3 quarters. And then in the third and fourth quarter, I think there was a tapering of BFSI growth given the economic uncertainty, but meanwhile, technology has picked up. And that's what overall has resulted in an annual growth of 18% in revenue and a 20% increase in profit after tax. I also want to mention we are in an investment cycle. We have been saying this in the past. So to that extent, our EBITDA does not reflect the overall EBITDA of individual businesses, because some of the businesses, we are still in an investment cycle.
So 18% growth in your top line, 20% growth in your net profit. But what's the guidance for FY26, sir?
Well, I'm sure we will do better.
All right. And how much better would that be, if you can just give us a range in terms of revenue as well as net profit?
I think given the uncertainty in the environment, the very fact that one can say better and grow better than 18% year on year, I think is quite significant. And the reason I'm again saying is that the investments that we have made so far, those are helping out. And we do believe that we can take advantage of those. We also have a new member in the family. We just did an acquisition of a very interesting company. It's called Iamneo, and Iamneo brings a missing piece in our puzzle in many ways in terms of the offerings that we had for our target customers. It's an AI-powered deep scaling SaaS platform, which will get very well integrated with everything that we offer to our customers in every part of our business, whether it is enterprise or consumer. And I think it will also open our minds, or open the doors for the higher education segment, which at this point of time is given the NEP wanting to integrate very strongly with the skilling space. So I think bringing skilling and higher education, Iamneo will also help us create that bridge. So we are very excited about acquisition, and I think all that will also contribute to the growth that we have looking forward for the next year.
Right. Mr. Thadani, just to push you a little bit further, you said you will do better than the 18% growth as far as top line is concerned for FY26. On the bottom line, are you expecting to do better? And as far as EBITDA margins are concerned, will you be at the same range at FY25? Can you give us at least a ballpark figure as far as FY26 is concerned?
I think at this point of time, EBITDA numbers, we are still this year, coming year, we will still remain in an investment cycle, which will remain calibrated. So to that extent, EBITDA percentages will remain in the same range that we have done this year. So we shouldn't expect anything better as far as that is concerned, as long as the overall growth picks up the way we are looking at. And we also want to make sure that the business overall remains profitable and continues to grow very fast.
Well, thank you so much for that, Mr. Thadani. It's a pleasure talking to you right after your numbers. Wishing you luck for the quarters ahead. But on that note, that's all we have on Midcap Radar from Vivek, me and everyone who put this show together. Thank you so much for tuning in. But don't go anywhere because MF Corner comes up next.